Welcome to this video. In this video, I'm going to be doing a stock analysis on Intercontinental Exchange. Now, as you can see, currently this stock is down quite a bit. As you can see, it did peak up quite a lot this year. As you can see, we almost hit 190, but overall we didn't. And ever since August, it has been a quite poor stock to own. As you can see, just turning downwards and downwards and downwards and downwards. And the RSI has been absolutely horrid. Now, if you don't know what the RSI is, that is the Relative Strength Index. This shows which way a stock is leaning. So if it's between 50 and 30, it's in the lower channel down here, meaning the stock is falling. This means there are more sellers in the market, but also often that there's quite a lot of shorters. So chances are we are seeing a lot of shorters in the market currently. Now, if it gets below 30, we're seeing oversold, meaning there's a lot more shorters and a lot sellers, meaning people are selling rapidly and it's going to fall quite rapidly. As you can see right here, when we have a oversold down here, as you can see, the stock price absolutely tanks. Now, the same is true for the opposite way around. So if it's above 50, but below 70, as you can see right here, we're trading upwards. Of course, we have a lot more buyers in the market than sellers, and if it's up here, it's most often not a good signal to buy because it means the stock is going upwards. But when it's down here, personally, I never like to buy. Now, the next support level we have on this stock is right down here, right around 41, the top of 148. And if we can hit that and we can resurface, that's going, of course, going to be quite nice. But overall, maybe let's wait and see if that happens. And currently, the day is quite poor. We're down by 2.8%. Now, something interesting that has been happening, as you can see right here, they invested $2 billion in Polymarket, which is quite interesting. And Polymarket, if you don't know, that is a crypto gambling website. Of course, that is going to be interesting to see. Now, something that is also interesting about this purchase is if we look at the overview, we can see they have quite a lot of debt. So they have almost $20 billion of debt, but they're still investing, which is quite interesting to see. Personally, I don't like it when companies have so much debt, especially in asset-light companies like this where they don't need to own that much. So of course, I want to see them brought this debt down before investing. But if they should invest in anything, I do think it's quite interesting to see they invest in a crypto gambling platform. Now, if you look at the revenue, as you can see, how do they make their money? It's exchanges. Of course, they own the New York Stock Exchange, and they also own still futures exchanges in the world. And they also have some mortgage technology and some fixed income and data services. So it is quite a tech-heavy company. Now, as you can see, the earnings as well, they are quite nice. Slowly but surely, they beat them just a smidge, or they're spot on. They pay out dividends. Of course, it's not amazing. It is only 1.17%, and sometimes they decrease it for a while, and sometimes they increase it. But overall, you shouldn't buy this stock for the dividends. Now, as you can see, the income statements down here, annually, they make quite a lot of money, and their margins are quite nice. So I do actually like this stock in the long run, also because we're seeing more and more people are getting into investing. That is great for ICE. Now, also, their margins are quite fat and thick, and that is something we definitely love to see. Of course, if it hits the bottom down here and it's going to resurface, I'm definitely going to buy into the stock. I personally don't own it at the moment, but I would definitely consider buying into this stock. Now, if you look at the performance of this, as you can see, if we just take the past 10 years, it is a nice and chill stock to own. As you can see, we'll have one negative year back in 2022, but this was a very poor year for stocks themselves. So overall, it is a quite nice performance, and we're even up this year by 5.4%, and at one point we're even up by 26%. Overall, it is a quite nice stock just to have in the back of your portfolio. The technicals for the day, it's a strong sell. For the week, it is a sell, and for the month, it is a hold. But overall, I would still be selling. To be honest, I would definitely not hold them. Of course, if you own them, then hold. I mean, I would be buying currently. That is because they are still in this falling trend. I want to see them break this trend even by trading sideways like so, or even if they may be trading upwards just a smidge, because overall it is just keeping on downwards and downwards and downwards. And recently, as you can see right here, we also did see it oversold recently, and I don't like to see that. Now, the analyst rating, however, they're quite nice. As you can see, with 13 strong buy, 3 buy, and 6 hold. This is quite nice to see. So overall, I would definitely consider getting ICE into my portfolio. Now, if you look at the EPS, they are just estimated to increase more and more and more and more, and this doesn't even surprise me at all. Now, the one thing I do want to see with this company is them bringing down their debt. That is the one minus I do have with them. And you should see the annual earnings, they're just increasing more and more and more, just in tow with the EPS. Now, the one thing that could be a problem for ICE is, of course, if we have a huge market crash and people stop trading, that would be a big problem for them, because they only make the money when people actually exchange stocks. So if you see a market crash where people stop trading stocks, that it might be a huge problem for ICE. Now, that was my analysis on ICE. If you like this video, please don't forget to leave a like and subscribe. And of course, remember, if you want to see more videos like this, please leave the company, show them to analyze in the comment section.